You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 7th day of January, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. 2 hours of live training every trading day. That broadcast is private, members only, and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael joins us a little later, he will show you step by step how to take the trial. We'll get your indicators up and running today. Your trial will start tomorrow, and you'll get 5 consecutive trading days where you have access not only to the live training room, but to everything you see here. We treat you just like a member for 5 trading days. So now today's already Tuesday, so that means your trial is going to carry over into next week. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast. The best way, you only have to do this once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click that link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email. That will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both those via our YouTube channel. It's easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting if you will, but we also archive each and every daily broadcast. Currently there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Okay, we have a new devotional topic today, day 1 of 7. 7 ways to renew your mind, which is probably a good thing to do at the beginning of a new year. We just finished our 12-day devotion on the gifts of the Spirit. If you missed that, you can always catch it on the YouTube channel. Our scripture today is Romans 12, verses 1 and 2. And I'm going to share from the Message translation. So here's what I want you to do. God helping you. Take your everyday, ordinary life. You're sleeping, eating, going to work, and walking around life, and place it before God as an offering. Embracing what God does for you is the best thing you can do for Him. Don't become so well adjusted to your culture that you fit into it without even thinking. Instead, fix your attention on God. You'll be changed from the inside out. Readily recognize what He wants from you and quickly respond to it. Unlike the culture around you, always dragging you down to its level of immaturity, God brings the best out of you, develops well-formed maturity in you. So here's the first step, 7 ways to renew your mind. First step is to stop waiting for an outside miracle to change your mind. Most of those miracles will never come until you get rid of the chaos in your mind by filling it with God's Word. However, the renewing of the mind will never start if you believe the excuse, "The reason why my mind is so negative is because my life is so hard." Have you ever thought that maybe the reason your life is so hard is because your mind is so negative? You cannot experience miracles regularly if your mind is a mess. We see in Scripture the importance of soil for a seed to be planted. Matthew 13:4. Some soil will make it easy to bear fruit, while others will cause the seed to be choked out and unfruitful. Stop making your mind a sidewalk for the enemy to trample on. Instead, make it a disciple to the Word of God. Do not let the enemy walk on your mind as a sidewalk. Otherwise, the Word of God has no chance to bring change. The birds will steal it from your heart. We see in the Old Testament a glimpse into how the people of God thought. Israel thought more miracles would change their minds, but most of them died as victims in the wilderness, even though they witnessed more miracles than any other generation has had a chance to see. We also see that the Pharisees believe the same lie. If Jesus would do a few more miracles, then they would believe He was the Son of God. However, despite all the supernatural things Jesus did, including the resurrection of the dead, they remained unconvinced. Do not get me wrong. We need miracles, but they alone do not change our minds without our humility and willingness to make God's Word the standard for our lives. Remember, the same sun that melts the ice also hardens the clay. Miracles are like that. For those who are hungry for God's Word, miracles help increase faith. But for those who refuse to allow God's Word to have dominion over their lives, miracles are never enough. If you stop blaming your circumstances for your negative thinking, God will start powerfully working on you. Let's pray. Heavenly Father, we offer ourselves to You as living sacrifices, holy and pleasing in Your sight. Transform our minds so we no longer conform to the patterns of this world, but live in alignment with Your will. Help us to discern what is good, pleasing, and perfect in Your eyes, and guide us to walk faithfully in Your purpose. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Tuesday. All right, let's take a look at the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. The Dow is down 71 points. The Nasdaq's down 302. That's 1.5%. S&P 500 is down 46. And the Russell 2000 is down 20, which is almost 1%. And the commodity basket, crude oil, up 54 cents, make that 55, trading 74.11 last. Gold up $18.60, trading 26.6620 last. Silver up 8 cents, trading 30.67 last. In the Asian markets at the close, the Nikkei broke its losing streak and posted a gain of 776 points. It's almost 2%. The Shanghai gained 22. The Hang Seng fell 240. That's just shy of 1.25%. And in the European markets at the close, FTSE down 4. The DAX up 133. The CAC up 43. So we had a mixed day in Asia. It was a mixed day for the UK. And so far, it is a red Radio Tuesday here in the US of A. With that, let's take a look at the news. I'm sure you've heard Canadian Prime Minister Justin Trudeau announced yesterday that he would resign from office, paving the way for his Liberal Party to choose a replacement ahead of general elections expected to take place by October. The move may help avoid a no-confidence vote by the legislature, which appeared likely after the New Democratic Party withdrew its support from Trudeau's coalition government. Assuming power in 2015, Trudeau entered office with significant popular support while championing a progressive agenda. His approval ratings have sunk from around 65% to close to 20%, driven in part by inflation, a housing crunch, and concerns over high levels of immigration. He was also criticized by members of his administration, including Finance Minister Chrystia Freeland, who resigned last month over how to respond to the tariff threats from President-elect Donald Trump. Trudeau said he would remain in office while the party chooses a successor. Put you on hold for just a second. And we're back. Disney has agreed to combine its Hulu Plus live TV service with Fubo TV, forming North America's second largest live TV streamer. The combined business will boast more than 6 million subscribers, behind YouTube's roughly 8 million subscribers. Sorry, I got to put you on hold one more time. Okay, we'll try it one more time. The 2025 Consumer Electronics Show begins today in Las Vegas, bringing together global companies, industry leaders, and tech enthusiasts for one of the world's largest electronics and tech events. With about 150,000 attendees and 4,500 exhibitors expected, the event will showcase the future of a projected $537 billion technology market. The event features high-profile keynotes, including NVIDIA's CEO, along with press events, product launches, and a vast exhibition space. While artificial intelligence, especially AI agents and generative AI, will remain a focal point, the conference will also delve into digital health, energy transition, aging technology, and more. Attendees can expect to see the latest in smart TVs, home appliances, and innovative transportation concepts, with major automakers expected to debut cutting-edge electric vehicles, including a hands-on flying car experience. And they've been talking about those flying cars since the Jetsons. Maybe it's finally there. Job openings rose more than economists expected in November, but other signs of cooling in the labor market emerged as fewer Americans left their jobs and hiring continued to slow. New data from the Bureau of Labor Statistics, released today, showed there were 8.1 million jobs open at the end of November, an increase from the 7.84 million seen in October, and the highest level of job openings since May of 2023. The October figure was revised higher from the 7.74 million initially reported. Economists surveyed by Bloomberg had expected today's report to show 7.74 million openings in November. In the stock market today, stocks reversed early gains as cautious investors weighed new economic data in the midst of NVIDIA's big artificial intelligence plans. 10-year Treasury yield added roughly 7 basis points to hover just below 4.7%, and bets on when the Federal Reserve will next cut interest rates were pushed back as well. President Trump, I guess we still have to call him President-elect until the inauguration. The certification process, I was able to watch that yesterday. Poor Kamala. President Trump, on Tuesday, today, announced a $20 billion new investment to build data centers across the United States. At a news conference at his home in Palm Beach, Florida, Trump said the investor is Emirati billionaire Hussein Sajwani, chairman of Damac Properties. Trump introduced Hussein, chairman of Damac, as one of the most respected business leaders in the Middle East, indeed the world. Big technology companies have been racing over the past year to set up data centers essential for powering generative artificial intelligence applications such as OpenAI's ChatGPT and Google's Gemini, which require immense computing power. Microsoft said last week it would spend about $80 billion this fiscal year to ramp up its AI capacity. Overall, global spending on procurement and installation of mechanical and electrical systems for data centers is likely to exceed $250 billion by 2030. JP Morgan said today that it's leaving the Net Zero Banking Alliance, completing a mass exodus of Wall Street banks from a key climate group. The biggest, you notice it's not called global warming anymore. It's now called climate change. But Wall Street apparently wants nothing to do with it. JP Morgan, the biggest lender in the U.S., said it would continue to work independently to advance the interests of our firm, our shareholders, and our clients, and remain focused on pragmatic solutions to help further low-carbon technologies while advancing energy security. JP Morgan's decision comes after similar exits in recent days and weeks by Morgan Stanley, Citigroup, Bank of America, Wells Fargo, and Goldman Sachs. The NZBA was formed in 2021 as part of the Glasgow Financial Alliance for Net Zero, and a number of banks touted their initial membership in the alliance as financial sector commitments to net zero goals became a focus for Wall Street. Now such affiliations are coming under political attack as the GOP prepares to take over all of Washington in 2025 and ramp up a focus on woke investing. Snow in Texas. A winter storm is poised to pummel Texas and the U.S. South later this week, putting the region at risk of blackouts and travel mayhem. About 4 to 6 inches of snow and ice will fall across southern Oklahoma and Texas, including Dallas, coating trees, roads, and power lines from San Antonio to northern Louisiana. The system is going to be a disruptive one with significant accumulations of snow and ice. It will start to build tomorrow night, getting stronger on Thursday before sweeping east across the south on Friday. This storm is likely to trigger widespread power outages, snarl transportation in a region where snowplows and salt trucks are rare, and ground or delay airline traffic. While temperatures won't approach the extreme lows seen during the February 2021 storm that killed more than 200 people and left millions without powers for days, any recurrence of cold raises concern about the stability of the state's fragile power grid. Hopefully Trump can do something about that as well. Yeah, he's got an awful lot on his plate. Let's just hope Congress cooperates. We got the White House, got the Senate, got the House of Representatives. But the question remains is, can they play nice together? We'll find out. All right, Logic 247. We're in week 336. Over the last 336 weeks, we've issued over 18,800 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week so far, this is current as of 8 a.m. Eastern this morning. This when Valerie did the recap, she'll update it this afternoon. We've issued a total of 21 alerts since Sunday night at 6 p.m. Eastern. Still waiting on the outcome at 12. So we got 9 actionable alerts, of which 1 or 11% would have been stopped out based on market structure and that simple process we teach all of our passport holders. Now, the purpose of the logic alerts, yes, you can trade them, but you really should be using them to learn how to read the chart. If your goal is to trade for a living, you got to speak the language. And the language of the markets, as a technical trader, are not words and sentences and paragraphs, but they're candlesticks, they're bars. There's how price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. You got to get to the point where you can look at any chart of any market and, along with our humble set of indicators, be able to instantly see what the next high probability move is. Now, what we've proven over 336 weeks is that about 20% of the time the market does not do the next high probability thing for a myriad of reasons. So, if you're striving for 100% perfection, that's not going to happen. It's simply not possible. I know there's all kinds of websites and emails you get that tell you they can read tomorrow's headlines today, but if you've been around a while, how's that working? It's not. You got to break it down, learn to read the chart, and learn how to trade. And in order to learn how to trade, you can stumble and fumble for years, or you can find someone to teach you how to trade. And that's the purpose of our live training room every trading day. Each logic alert has an entry price, an initial target designed to help you get your goal for the day, and then additional targets and a final trade to target. Using those alerts and drawing horizontal lines on your 30-minute chart, you will rather quickly learn how to spot potential resistance potential support, and find the windows of opportunity that lurk in between those two important areas. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. Our original alert service, the concierge trade alerts, they're a little bit different. Number one, they don't come out around the clock. They're published as a static report. It used to be shortly after the Globex Open each evening, which is 6 p.m. Eastern. But for the last few weeks, I've been experimenting with getting them out 5 minutes ahead of the Open. And as you can see, we managed to do that last night. Now, if you're a member or trial member, be sure to read this information. Make sure you understand it. If you don't, ask so that we can explain it to you. All of our members, all of our trial members had all of these targets last night, 5 minutes before the market opened. Bonds, silver, gold, NQ, crude, Russell, the Dow, and the ES, that's the S&P 500 E-mini. So as we go to the charts, keep in mind that the targets you'll see were published 5 minutes before the open last night. We'll start with the daily chart as we always do. Now, we got quite a series of lower highs here, but we're coming down to support. As you can see at the open last night, we did move higher, and well, then we didn't. And so if you look at that wick right there, you see the step line has crossed red and falling. Now when the step line crosses red and falling, that typically means we're going to get a retracement back to the BBC. But I think that retracement may have come a day early. But right here you've got support times 2. Really support times 3 if you look at the big picture. When the step line gets directly below price as it is now, that's potential support. When red and falling gets directly below price, that's potential support. And of course right here is the 24% fib retracement. Support, support. We overshot it a couple times, coming down to this key area here that we talked about in a workshop several weeks ago. That's an important price, important area. You can see the step line crossed red and falling, turning it into blue and climbing. Important area. Important prices, important areas are almost always tested. So there's buyers waiting here to try to take this back up. We'll see who has the heavier hand. If we get through those two and the 24% fib retracement, then we're back down to the 0 line on the fib extensions. And down, way down here is the 38% fib retracement. Now this is a daily chart, and I know you probably don't trade a daily chart, but I recommend, whether you trade futures or stocks or crypto or Forex or ETFs, just spend 2 minutes each day with the daily chart of whatever it is you're about to trade. Not only does this give you a free look over the shoulder of the deep pockets that move price. I'm talking about the institutional traders who have accounts in the hundreds of millions, billions, and even trillions of dollars. They trade in massive size. They move price. So whatever they're doing, it's usually a good idea not to trade against that. Okay? Now, this is going to be interesting. By the end of the broadcast, we're going to see one of two things. We're going to see that price has overcome this potential support, or we're going to see this red back pedal, and then you'll have a big wick. We'll take a look at the end of the broadcast and see what's happening. All right, the 30-minute chart. That's where all the alerts are created. There's nothing magical about 30 minutes. It's just a time frame I chose years ago. And they say if it's not broke, leave it alone. Also, these are this week's weekly trading zones. If you were tuned in yesterday, you saw last week's zones because the alerts that go out on Sunday night are based on the previous week's zones. The new zones come out every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price rallies up to a weekly trading zone, as it did here, we expect that to be resistance until proven otherwise. Yesterday we did overcome it. And then we dropped back to the zone below. And when price drops to a zone, we expect support, like we had here, and here, and all across here. And then that big move down this morning, what time was that? 10 a.m. Eastern. We had some news at 10 a.m. And we've got our bearish cross. That's when the red line gets below the green line on the 30-minute chart. And the market has found support down here at 59.67/68. So we've gone from zone to zone to zone. Only three things happen when price encounters a weekly zone. 70% of the time will be consolidation, 20% of the time rejection, 10% of the time the slice. Now, when a 30-minute candle slices through a zone like it's not even there, what typically happens is price will retrace back to the zone it sliced through and continue in the direction of the slice. In this case, that did not happen. Very few things are 100%, but it happens more often than not. So, we know that in order to get to the long target, we would have to overcome this resistance right here at the zone. We were unable to do that. That's the 9:30 open. Now the 9:30 candle is typically the biggest candle of the session, but the 10 o'clock and even the 10:30 candle were significantly larger. And then this candle is the 11:30 candle. That's when the European markets close, and you usually see some pretty good movement, and we did, and it was to the downside. So now you've got the step line above price. So whereas on the daily we said it's support, as you drill down to the 30-minute, because it's directly above price, it's potential resistance. Here, here, and then of course here. That's if the market can muster a rally. The last two attempts to rally, last three attempts, four attempts, all got slapped back down. Now the zones are published Monday morning, 6:15 a.m. Eastern. We've published them every week for the last 15 years. We hit the 15-year mark in December. The vertical line that separates today, Tuesday, from Monday, and then back over here would be Friday. Okay? So we're sitting on top of support right now at the weekly zone. If we break through the zone, we got to look back to Friday to find potential support. And there it is at 59.53. and then again at roughly 59.45, and then you're at the zone below. Okay, so we've got a little bit of a dogfight going on here. We'll see how that pans out. Again, on the daily, you've got support right there. But on the 30, you got resistance. Sometimes the best trade is no trade. Wait. Get some clarity. On the Dow, this target, all of these targets went out 5 minutes before the open last night. I just didn't have a chance to pretty them up like I normally do. There we go. Okay. So this is the opening candle last night. And these targets were published 5 minutes before the open. So we headed down. We didn't make it to the zone. We had red and falling below us, which turned to blue and climbing. That acted as support, but you can see that one little wick there. It reached down and touched the zone. But it stayed blue, and it took us up through the BBC. The green line's called the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish. We anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. The pullback holds more often than not, whether you're pulling from below or pulling down from above. But eventually, after it holds and it holds and it holds, eventually it will trade through. Okay. Now, when you get a retracement, you never know if it's going to hold or not. This is where you have to exercise patience. So we consolidated here along the BBC till about 6 o'clock this morning, and then we put in a high that matched the high of the opening candle last night. That sent us back down to the step line and blue and climbing. Support times 2. That took us up to the zone, through the zone, but we came a little bit shy. Got to 212, and the target, it was at 225. But any one of these candles, this one as an example, opened at 11 and ran up to 48. So 37 points. You only need 20 points to get your goal for the day. And you could have done it in that one candle right there, or that one, or that one, or that one, even that one. Expecting that price is going to run into resistance here at the zone. But it didn't. It poked through it, but quickly reversed. Now price has come down to this zone once. On the second attempt, it made it to the short target, which when the market finds support, it goes and looks for resistance. Remember, the pullback holds more often than not, especially when you have red and falling overhead. And that sent price back down to the short target. Now we're trading through the short target. We haven't taken out this low. This low right here is 859. This low here is 861. So we're on the verge. If we take out that low, then going all the way back to Friday, we can see that there's pretty clear sailing down to the next zone. On the Russell, you know, that's such an odd candle. Let me refresh this thing. Sometimes just changing time frames and putting it back. Yeah, that looks more like it. Okay. So we got to do this, which I normally do before the broadcast starts. Obviously, I was unable to do that today. Okay. All right. Opening candle. Pretty much like the other markets, we came down to red and falling. Red and falling got directly below price. See how on the way down you had price, step line, red and falling. Okay. Once that step line crosses red and falling, you expect a retracement to the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. So we got a leg, we got a retracement, the pullback held, set us up to the zone. We consolidated for an hour, and then we tried to reach up to that long target. We made it up to 2302.6, and 2305 was the actual target. This candle, however, provided you with the 2 points you would need to get your goal for the day. Then we reversed pretty hard. We traveled through this zone, and again, lack of buying prevented us. Well, we did eventually pull back to the zone, but not on the not the next candle. See this one? It attempted, see the little green? It attempted to pull back to the zone, but there was just not enough buying interest to hold it up. And we had resistance at the zone, and that sent us back down to the target again. Now we're consolidating for an hour and a half right here at the zone. We spiked the zone, and if you look at the horizontal line on my cursor, follow it over Monday to Friday, okay? Where the market found support on Friday is where it has found support today. That's what I mean when I talk about market structure. Price goes from support to resistance, back to support, back to resistance, over and over, again and again. The NQ. We opened here, dropped to the BBC, had a little support. I mean, this one green candle opened at 768 and ran up to 785. That's almost $400 per contract traded right there. Blue and climbing turned to red and falling. We made a run at the short target, but this low from yesterday held as support, sent us back up, a lot of sideways movement, the zone, and then we had another slice through the zone. It's odd to see that many slices in one day. We hit the zone and we bounced, and then we came back, and now we're consolidating at the zone. Remember, that's what happens 70% of the time. Now if price trades, if we take out this current low, Tuesday, Monday, Friday, you should expect support. Actually, what's the low of this candle? 337. Yep. And then 298. And this candle is basically at the zone. The low is 261. The zone's 56.57. So as you can see, by looking left, you know where to expect potential support. Now the distance between here and here, that's called a window of opportunity. That's a little large. You see, we want to get below the low of this low and get out before the low of that low. More like that. And maybe move it down. Yeah, kind of like so. Okay. Now, you don't want to go short. Right at this low, you want price to prove itself. So the whole thing needs to be made a little smaller and dropped down a touch. There we go. That's pretty close. So what do we got? 302 up to, or I should start with this one. 31 down to 301. That would be 30 points. At $20 a point, this little area right here is $600 per contract traded. But you want to make sure price takes out this low and then expect support at this low. Now it doesn't have to stop at this low. It can continue right on down to the zone. Okay. You got to embrace the whole picture. Take a holistic view at the market. Crude oil. We hit the short target. And we hit the long target. This is where we opened last night. And while we had blue and climbing below us, look at that wick. It managed to stick through blue and climbing and tag the target. That target was based off this low from yesterday. Market structure. Support sends us to resistance. Resistance sends us back to support at the zone. Support sends us looking for resistance. We trade through the BBC. We traded through the zone. We hit the long target. The step line crossed right here. Now, price continued higher, a little unusual, but we did get our pullback to the BBC. In fact, it spiked the BBC and hit the zone. So here's the zone here, 73.80.85, and here 73.80.85. And that has now bounced us all the way up to red and falling. If we close above red and falling, then the high of this candle, 74.45, that would be your next area that you would anticipate potential resistance. All right, we made it all the way to crude. When I come back, we'll go through gold. Michael is here. He's going to give us a recap of everything that happened in the live training room this morning. And then we'll do some live trading on the TradingView platform. And then, as I said, I'll come back. We'll finish the recap of the alerts and close it out with our good word for the day. Okay, Michael, looks good.
All right. Good. All right, here we go then. Good afternoon, everyone. Today is Tuesday, January 7th of 2025. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. All right, there's no credit card required for the trial. Just click on that purple button. And when you do, you're going to be brought to the registration page. That registration page is right here, right? This is what the registration page looks like. All that we ask for is your name, your email, your phone number, 5 multiple choice questions, and down at the bottom, if you have Ninja and you want to use Ninja charts, give us your machine ID. Otherwise, if you're just trading on Ninja, we don't need the machine ID. If you actually want to use our indicators, you probably want to get TradingView. All right, give us your TradingView login ID, because the main indicators that we use are only available on TradingView. All right, so the spreadsheet. Today, it took us 4 minutes and 4 trades to get to the goal for the day. That's because we stopped out on one, we had a couple of break evens, and then we ended up having a couple of wins as well. Or stopped out on one, had 1 break even, and then 2 wins. I'll get into it. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 7th day of January, 2025. We're up 218 ticks on the NQ, 86 on the Russell, 20 on gold, and 2 on the ES. That put us at $1,745 per contract this morning. Today it took 4 minutes and 4 trades to get to the goal for the day. That one we're up $1,600 with 10 contracts on, and we took a total of 37 trades. So on the month now, we're at $6,977. Over 4 business days, averaging $1,744 per contract per 2-hour business day. On the year, same thing. Getting the goal for the day. Now, this stuff down here, this number here should actually be that. The way it works out, the math doesn't work right now. Until that gets over 60, then the math doesn't work right. But basically, it's 915 times 4 by the hour, right? So it's about $3,600 an hour. $36.50 an hour, roughly $36.60. That's where we are with the 2420 blueprint. Okay, so far. I'll fix that math later today, probably, if I get around to it. So the trades, let's get into the trades. Now, there are a bunch of trades that I got, a bunch of trades that I didn't get. You can see all the straight lines of trades that I didn't get, and those are just some of the trades that I didn't get. But there are a lot of break-even trades today. I don't know why we had some break-even trades today, but we did. And there we go. All right, we'll start out here on gold. Looks like our first trade on gold was 1 tick, and then our next trade was 14 to get us to plus 15, I think. Yeah, I think that's what it was. And then the next trade after that was 5 ticks to get us to 20. And we had a break even, and another break even, and another break even, and another break even, and a lot of break even trades. And if you look in here at all these horizontal lines, I didn't get all the horizontal lines where they should be. There should be one there. We've got that trade. There should be one over here. There should be a bunch more. There should be one here. We went long on this, but we didn't get the short right there. We didn't get this short. Right. Oh, we did get a break even on that one. We went long on that. We didn't get the long on this. We didn't get the long on that. But anyway, we ended up with plus 20 on the gold. The gold was, it was moving around enough today to get some good trades off. There were some stop outs, of course. There were stop outs. You have to be quick with your dom and with your entries when you're trading on a time frame like this, on a 9 range like this. You have to be quick with your dom and your entries because these trade setups, they happen quickly. All right, so you gotta be ready for it, and then note the open, get in at the open or better if you can, and just manage your risk. All right. Speaking of managing the risk, there were plenty of trades in here. You see every one of these that goes into the blue that goes into the overbought or sold by itself. That's a valid trade. All right. It's going to go by itself. The black lid here. So speaking of managing your risk, I added something on the trade rules page, a 50 tick range bar. Okay, a 50 tick range bar has a 60 tick stop that trails to break even after 20 ticks in profit with a 75 tick target. All right, now I'm mentioning that because we did use a 50 tick range on the NQ today. After a little while, we did. Russell, we had quite a few trades on the Russell today, and I used the Russell as my training market, as you can see. And let's scroll all the way back here. All right, so our first trade on the Russell. Now, our very first trade on the Russell, I believe, I don't know why I have that blue arrow right there. Is that today? Today's the 7th. Our very first trade on the Russell was a stop out. I think that should be a red one, or I'm not exactly sure. Our very first trade on the Russell was a stop out. Okay, then the next trade after that, we picked up 20. I'm looking at the wrong thing. Here it is, right here. Okay, so I was looking at the wrong day. Our first trade on the Russell, that makes sense. Our very first trade on the Russell was a plus 20. That's what it was. Our very first trade on the Russell was a plus 20. Then we had a break even. Then we had a plus 9 to get us to 29. Then we had a plus 13 to get us to 42. And you see there were a bunch more trades in here, right? A bunch more trades in here that I didn't get. Then we had over here, we went from 42 to 45, so we had a 3 tick. Then went from 45 to 47, so we had a 2 tick. Then went from 47 to 68, so we had a 21 tick. And then went from 68 to 86, so we had a 18 tick. And then we had a break even. Is that right? 68 to 86, yeah, 18 tick. And then we had a break even trade. Then we stopped trading for a little while, and it looks like we stopped trading altogether. I was using this in the lesson plan today. I did record the lesson plan. I'll have to put it out somewhere. Find a place to put that lesson plan. But you can see there are a bunch more trades in here. Whenever the blue leads into the overbought, the oversold, it's a trade. Okay, whenever it leads into the overbought or the oversold, it's a trade. All right. Now I know we had one of our guys said he stopped out 6 times in a row. And I didn't see a place anywhere where you would stop out 6 times in a row if you took every trade. It wasn't on the Russell that he did that, I don't think. I think he was talking about the NQ. But I couldn't even see 6 stop outs. You know, in the time period that he said it, I didn't see 6 stop outs. So I have a feeling that something's not being done correctly. And I will have to, I know you're on my list of people to sit with, so we'll have to get together and do that. All right, on the so we ended up on the Russell. I'm sorry, on the Russell we ended up with plus 86 ticks. All right, and on the ES now, we had our first trade here on the ES. We picked up 2 ticks. I'm not sure that that's right. We picked up 2 ticks on the ES. Then we stopped out and went to -8, and then we picked up 8 ticks and went to 0, and then. This is break even there, break even there, break even there. Went from 0 to -10, so there's stuff that's missing in here. Okay. Well, let's go back. The order of things isn't exactly right here, but the way that it went, we went from 2 ticks to -8 ticks, so we stopped out. Then we had a +8, they got us to 0. Then we had a stop out, they got us to -10. Then we had a +8 that got us to -2, and then we had a +4 that got us to 2. So that's, I don't see all those trades shown in here. 1, 2, 3, 4. Right, 1, 2, 3, 4, 5, 6, 7, 8 trades. And there's 1 trade missing somewhere. But I think it's the first stop out, I think, is missing the red arrow, but I included it in the numbers. Anyway, we ended up with +2 on the ES. Now, during the break on the ES, let's see what was there during the break. There was the first trade here on the break was a nice win. The next trade on the break was another nice win. The next trade on the break, if you took this one right here, that was a nice win. The next trade, if you took this one right here, you would have been selling this bar right here. That probably would have gotten really close to stopping you out, but it ended up being a win. This one right here, you would have been buying this bar. That would have been again close to stopping you out, but it would have been a win. This one would have been a break even. This one looks like it probably stopped out. Yeah, this one didn't go enough to get the stop to break even. That would have been a stop out. This one would have been a win. 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 This one would have been going long right there. Some kind of a win. This one right here, that was really close to stopping you out. Looks like it would have been a stop out to the tick. And this one would have stopped you out again to the tick. And moving through, this one right here would have been a win. this one right here would have been a win. This one that just happened would have been a win. And those are the rest of trades on the yes. So there were plenty of trades to be taken just on the yes all by itself, and plenty of opportunities that would have worked out. Okay, now the NQ, as usual, the NQ had way too many trades to count, but we didn't take that many, so we can go through the ones that we took. Okay, you can see some of the red lines show some of the trades that we took. Now our first trade on the NQ, we stopped that on, we're minus 36. Then our next trade, we picked up 48 ticks, and the one after that, we picked up another 48 ticks. So we were minus 36 and went to plus 12, then went to plus 60. Then we had a break even, then we went from 60 to 92. Then there are a bunch of trades through here that I did not highlight, but in here we had a break even, we went from 92 to 104. Then we went from 104 to 112, and then we had a stop out that brought us down to 76. And then we had a break even. Then from 76 to 124, break even. Then 124 to 128, then a stop out. Man, 128, I'm sorry, this wasn't 124 to 128 somewhere. And then on this one here, we went from 128 to 203 because we switched to a 50 range bar at this point. We went to 203. And then we stopped out, minus 60 ticks on that one, brought me down to 143, and then we got another 75 ticks on that one, brought me up to 218. And that was where I ended it on the NQ. Now, the reason I added that extra line in here on the trade rules page, this one right here, is because I went to a 50 range bar. Here, you see this is a 50 range on the NQ. And everything is the same on the NQ except the stop. Stop, when you move the stop to break even, how you trail and all that stuff. So in here on the 50 range, the stop would have been 60 ticks. You would have been entering right here. 60 ticks is 15 points. Okay, 15 points. So if you're entering right here at 505, you can't get below 490. And it pulled back down to 498. So this right here would have been a nice win. Okay, we had a 75 tick win right there. This right here would have stopped you out, minus 60. This right here, you would have been buying this one, again, 15 points, so you couldn't get down to 43 to 33 to 28. And you get down to 33. Okay, so that would have been another 75 tick win. This would have been a 50 tick win. This one over here, it pulled back. You would have been selling right here at the open of this bar at 37. So 15 would put you at 52. All right, the highest to get up was 51.25, so that would have been another win. This one right here looks like it probably would have got you. You would have been buying that bar. Yeah, that definitely would have stopped you out. Minus 60. In here, you would have gotten your stop to break even on that. In here, probably would have gotten your stop to break even on that. You're moving the stop to break even after 20 ticks. Okay, so in here, there's a 50 range bar. You would have had a break even or just locked in some profit. You definitely wouldn't have stopped out. In here, would have been this bar right here, 50 to 60 ticks in profit. In here, you would have been buying that bar. That went about 40 or 50 in profit before it went all the way up here. Then right here, you would have been buying that bar, that's 75. In here, you would have been buying that bar, 75. In here, you'd have been selling that bar, 75. You see how this is it just adds up over and over right in here. You would have been buying this bar. I know it looks like it went down here, but you've been buying right here at this one right here. You would have been buying here at 42.5. And it ran up from 42.5 all the way up to 52.5, 10 points, 40 something ticks it ran before it came down. This one right here, you would have gotten all 75. The NQ has just been so fast lately that I thought on the 31 range, it was jumping all over the place. So I bumped it to a 50 range. I thought that would be prudent given the volatility that we are currently experiencing in the markets. Now, we did have some news that came out today. Dwayne probably already went over this, but I haven't even looked at it. So I want to look at it myself and see what we did have. All right. Today is Tuesday. All right, imports balance was positive, balance of trade negative. That was all pre-market stuff. The euro stuff all came in pretty much as expected. And then the ISM services PMI at 10 o'clock came in better than anticipated. ISM services prices came in a lot better than anticipated. Jolt's job quits. That came in worse than expected. No, Jolt's job quits. Job openings was much better, and the job quits was quite a bit worse. It was almost 10% worse than what they were expecting. That's interesting that they have that. Job openings were much better because everybody quit. Interesting dynamic. Tomorrow, let's see, at 8:30, we have Fed Waller speech, jobless claims. We have crude inventories tomorrow. Tomorrow's Wednesday, crude inventories as we usually have them on Wednesday. And no high impact news tomorrow, except in the afternoon. We have FOMC meeting minutes. This is going to be a big deal tomorrow afternoon. The FOMC meeting minutes. And then Friday, of course, we have the highest impact stuff really all month. On Friday, the non-farm payrolls, the unemployment rate, Biden's last unemployment rate. All right, that's what we had for news. Now, let's see what we have for trading. The black is leading the way down here, so there's no trade. The ES actually had a trade here just a second ago from the open of this bar. Right here was a trade. It's late to get into that now. And the other ones don't have anything yet. Okay, so I can take a break. Does anybody have any questions about anything that I've said or done at this juncture? I'm on a 50 range on the NQ right now. It's got a 60 by 75 bracket. Okay, 60 by 75 bracket. Okay. Dan, are you in here? Dan A is not in here. Graham, are you using the Sierra chart stuff right now? I'm just curious. Or do you just stick with the other stuff? Stephen S. I think, okay, good. Stephen S., we finished our conversation in text last night, right? Yeah, I texted Bert, and he didn't get back to me yet, but he said he will get back to me. Okay, about the CQG stuff. I know some of you guys have been waiting to hear back about when you're going to get an actual trial that'll run again on that. And it kind of stinks because if they don't give you the same ID that you had before and you created any kind of a workspace or layout or anything like that, then you're going to lose that. But I basically said that, mine expired a month ago and I can't get a new one. I can't use a different email to go get a new one because they track it by IP address. So nobody's going to go to that if they don't have a demo account that's valid. And the big deal at the beginning was we're all going to get valid demo accounts. If you have $1 in your account, you have a valid demo account. And as far as I know, nobody's got a valid demo account. So far, it hasn't been a great thing. This is a short here on the gold. Short here on the gold. The open of this bar right here at 4.7. I'm actually in at 4.8, one tick better. Okay, when it gets to 5 ticks in profit, I'll bump the stop to break even. Now, the reason I shorted there was because the blue, went up into the overbought. All right, stop to break even. The blue went into the overbought. That means you sell the open of the next bar, right? So I sold one tick better than the open of the next bar because it pulled back a little bit. Now I'm in a risk-free trade. Now let me show you something else about this. All right, there was a trade here on the S I just missed too. But let me show you something else about this. Now, you see we're in a downtrend, then right here it failed to put in a significantly lower swing, but it pulled back up. 50% of this retracement pulled back up, found resistance right there, and it should push down. It should push down another leg length like this one right here right now. That's what it should do. And if you look at that leg length, looks like it goes, it's probably going to give me a break even because I didn't move my stop to any profit yet, but it looks like the leg length goes from here to there, right? So I can grab that. Oops, I can't. I did give me a break even. But I can grab that and move it over here. That's what it should do. That little bit right there. It ended up giving me a break even. There was a short over here on the ES on the open of this bar right here. All right, the same leg length is happening again right there. The same thing that I just drew over is happening now. Here. Here's our leg length. From there, oops, down to there. It's a crooked leg length, but it's leg length nonetheless. Okay. From there down to there is what you should expect out of that. All right, you guys see all that? No, not in here right now, Steven. Only one in here right now. We did have a conversation last night on text message, didn't we? That was you, wasn't it? Hang on, let me go back and look. Yeah, that was you. Yesterday. At 9. Oh, maybe it wasn't yesterday morning. Was it yesterday? That was last night. Started last night, and then I gave you one last text this morning at 9:14. Maybe it was the day before yesterday. Oh, it was Sunday. Okay, it was Sunday. It wasn't yesterday. It wasn't yesterday. It was the day before yesterday. All right, here's another short on the yes. Okay. This right here was a short on the yes. I missed it. The NQ's almost got something. I'm not sure if it's going to be if it gives us an up close here. Looks like the black's going to be all over it. But we had two shorts right here, two profitable shorts right here on the yes. Each one of these trades right here, that one and that one were good trades. Could have gotten your goal for down the first one and got most of your goal for down the second one. If you get in there at 85.25, you could have gotten your goal for down the second one if you would have filled at the very bottom. Both of those trades right there, last 5 minutes would have given you your goal for the day. And this one over here on gold, if I had paid attention to it, it would have given half the goal for the day. The NQ could give us something here on the short side. Bring some chop right here, so that's good. And we'll see if he gives us a trade. Yeah, Steven, you're asking about the scaling, and I said, okay, it didn't end up giving us a trade. When you put the stuff on, if you mess with the scaling, if you change anything on the scaling with it, like watch this right here. You see what this looks like? I'll take a picture of it. Let's take a picture of what that looks like. Hey, that was my thing from this morning. This is what they look like right now. Okay. If I come in here and I mess with the scaling on the slingshot and I say pin to scale A, and you see what it just did? I don't need to do it on more than one. We can just look at that one. Here it is. This was it right here. Okay. And I did pin to scale A, and you see how it looks different? This is what it looks like, and this is what it looks like now. Pin to scale A because it's from 0 to 100. Okay. So the way to fix that, I think you can go pin to scale, left scale. I think, hang on. Yeah, you want that one to be the left scale. Pin to scale, new left scale. And that didn't exactly fix it, so you can just get rid of it. Come in here and go to indicators and just add a new one. All right, and then click on the 3 dots and do move to existing pane above, and then it's back in the right place. Okay. That's what we want it like that. Let's see. If you mess with the scales, it just kind of messes things up. You're better off just leaving them alone. Okay, that was Sunday that you were asking me about that, I think. I think it was you. It's got your name on it on my phone in a text message. Several text messages, as a matter of fact. Okay, well, all you have to do is what I just said. You know, if you have nothing on down here, let's get rid of everything down here. If you have nothing down there, just go to indicators, put your ultimate slingshot on, and put your TV trades range trigger on. And then just go here and move to existing pane above. Now the range trigger had an update last night. So to make it look like these other ones right in here, you have to go into style, and it's color 3 under the snipe. It's color 3. All right. Move that to like 50 something and make it fat. It'd be like that. Okay. That's all you have to do. All right. Keep missing all these trades. This is the 3rd trade on the S, and I missed them all. And every one has been profitable. All 3 of these trades on the S have been good trades. Do you see how quick and easy that is? Right there. Perfect. Right there. The open of that bar. Perfect. Right there. The open of that bar. Perfect. Goal, goal, goal. 3 times. And this is it. 122. I don't know if Matt's in here. Matthew, are you in here? No, Matt's not in here right now. He was asking me if trading lunchtime or trading at noon was a good time to trade. And I said, you know, trading from 11:30 when European markets close is usually some pretty good trading. You know, if you go through the trade setups that happened in here, starting at 11:30, I'm sure there were plenty of opportunities to get your goal for the day. There's one right here would have been the goal. One right here would have been the goal. One right here would have been the goal. One right here would have been part of the goal. You know, there's just a ton of opportunities. We just had 3 of them right here, 3 in a row. You could have gotten your goal. And that one right there. 3 trades right in a row. All right. So it's 124. We only have 6 minutes left. And so far, the only trade I've actually taken is the one here on the Russell. And with a break even on that. Nothing else is triggered yet. We had these 3 that I missed here on the ES. Every one of those was a good trade.
And the
Right.
YouTube channel, Mark S. made a comment about use of VPN. So I guess he's referring to something you said about something. I'm not sure.
VPN, virtual private network. There's a long here on gold. I don't have my YouTube open, but
Well, I typed in a question mark so that he would hopefully explain what he meant by that.
Yes. All right, over here on the ES right now, if we get an up close, we'll have a trade that we probably can get off here in the next couple of minutes. The gold trade, we put that on the right place, I think. 65.0, 65.1, we're 1 tick better. That's better. I don't know if it's going to work out for us. But I suspect if he's asking about a VPN, that means he's having a delay in his fills.
I'm thinking maybe if you wanted to get another demo account from StoneX.
Oh, okay.
Maybe
okay.
Maybe that's what he's referring
change
to.
the IP address or something like that.
I have no idea.
I don't know either. experts on it. I mean, everybody that has a demo account, everybody that has a live account at StoneX should have a demo account for CQG. And as far as I know, that's not happened. Right, so the gold here, we're waiting for that right now to give us what we're looking for. We need 5 ticks in profit to bump that stop to break even. Okay, now in hindsight, you always see what this looks like in hindsight. This is what it looks like in real time. Right, this is a deep pullback on the trade that we took. Now we got in one better than what the entry was right there. So now we'll see what it looks like in real time. We need this bar to close up and then for it to get up here to the prior swing high. So 5 ticks is what we're going to be looking for here. We'll bump our stop to break even. It should get up here. The prior swing high is 66.7. Up here is where it should go. Okay. So we'll see where it does go. There's 4 ticks, still at 3 now. And none of the other markets are giving us a trade yet. It's 4 again, there's 5. Stop to break even again. I'm going to lock in 1 tick on this one because the last one I ended up with a break even. But we should see it get at least up to the prior swing high. Now, if we were in a nice uptrend right here, I would look for the full leg length, right? Not just the prior swing high, but we're in a little bit of a choppy spot right here. We put in a lower swing. We didn't put in a higher swing, but we did get up above that prior swing high right there. We didn't get up above this one. So we're in a little bit of a choppy spot right here. If I were to draw a trend line down, I could draw lower highs and higher lows right now. Okay. So I'm going to lock in 1 more tick on this. It's going to decide one way or another here soon. And hopefully we'll be on the right side of that. Okay. Here it is. So it's starting to decide. I'm going to lock in just 5 here. Now that's $50. I'm sorry. That's $500 with the 10 contracts on. It's $50 a contract there. All right. So there's $500. And it's still deciding. All right. None of these other ones have a trade right here yet. So of the trades that were available to us, that was actually on that bar right there that I went long. The open of that bar is where I went long. It's going to give us a short right here. Now we're in some chop, so that should be okay to take. Okay, if we get an up close on this bar, we're going to get a shorting opportunity, and we're in some chop. If you were to draw that trend line that I just mentioned, it would go something like this. Okay. I think it would actually go a little steeper. Go like this. Like that. So we didn't get up into the overbought, so we did end up with a short here. But you see what I was looking for, right? All right, well, it is 1:29, and I did it. I made it here on time today, Dane. Sorry about yesterday.
Oh, no worries. No problem.
All right, so let's go here. If you've not taken the free trial with us, go here to mytrading.com. All right, click on this button right here. There's no credit card required for the trial. Click on that button. It's going to bring you to this registration page. Just fill it out. It takes about 30 seconds. Fill that out. Get TradingView. All right. These indicators that we're showing you right here, they're only available on TradingView. They're not available on anything else. The ultimate slingshot is part of TIQ, and the trigger is also part of TIQ/TV trades. Okay. If you're a TIQ passport member, you get to use that. If you're a TIQ mentoring member, you get to see it in the room in the morning. Okay. So that is how you get that. And one more time over here. Today we were up 218 ticks on the NQ, 86 on the Russell, 20 on gold, and 2 on the ES. So $1,745 with 1 contract this morning. 4 minutes and 4 trades to get to the goal for the day. At that point, we're up $1,600 with 10 contracts on. We took a total of 37 trades. So on the month now, 4 days in, we're at $6,977.50, averaging $1,744 per contract per 2-hour business day. Right, the yearly stuff is the same. And that's it. All right, with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. The ES has got another trade here. It's all yours, D.
Okey-doke. All right. recap of the morning session.
Today it took 4 minutes and 4 trades to get to $1,600.
Good job.
Thank you. Thank you.
Okay, we'll pick up where we left off. We already did the ES, did the Dow, did the Russell, did the NQ, we did crude. Now we're at gold. And let me pull these over so they look appropriate. Normally I get that done before the broadcast starts. Today I didn't. So, okay. Again, the vertical line separates today, Tuesday, from Monday. These are this week's weekly trading zones. We opened last night right here. Now everyone had the targets 5 minutes before the open. We opened below the BBC, printed a red candle, and it took us right down to 2643.7. The zone is 43/44. So price pulled up to the BBC at the close of yesterday's session, and then when we opened last night, the pullback held, and it sent us down to the zone. Now, just the one candle there from 45. What was the open? 45.3 down to 44. You only need a $1 move to get your go for the day. When the market finds support, as it did at the zone, 43/44, it will go look for resistance. We made it all the way up to here, failing to take out that high from yesterday. Sign of weakness, sent us back to the BBC, the pullback held. So we got a leg, got a retracement, pullback held, and it sent us all the way up to the zone overhead at 2657/58. Now, notice that not only was there a zone there, but you can see the step line, how it reversed its course right at that spot. Okay, so the resistance held. That means the market's going to go look for support. Pull back to the BBC holds more often than not. So from support to resistance, back to support, back to resistance. And then when you exceed a long target, often when price pulls back, you'll find support, in this case at the top of the target. Okay, these other ones spiked it, but this one opened right at it. Support, and that support took us all the way across this zone, and we've talked about the slice already today. Here's one where when the slice ran out of steam, it actually retraced back to the zone it sliced through, but it really didn't continue. Well, it continued a little bit in the direction of the slice, but it didn't take out that high at 78.5. That sent price all the way back to the BBC. We spiked the zone. I was at 10. The news this morning really rocked the markets at 10 a.m. Eastern. We spiked the zone and almost found support at the top of the target, but we didn't quite get there. So even though we spiked it, look where we closed, and where we closed, and where we closed. Okay, so the pullback held. Sent us up to the zone and red and falling. That's resistance times 2. Resistance sends the market looking for support. So we're sitting on top of the BBC. We expect the pullback to hold until it doesn't. So in this case, you've got red and falling overhead, and you've had it for a while. So we know that even though the pullback holds more often than it doesn't, here, you got this red and falling overhead like this, that's an indication that this pullback may not hold. But you don't know until the candle closes. And this candle's still got 24 minutes left in its lifespan. Even if it does hold, you got potential resistance right overhead. So I would prefer to see it not hold at this point, trade below this low right here, and maybe trade 26.59 down to 26.58, and that would give you your goal for the day, whether you're trading one contract or 100. Silver. This was the open last night. We dropped, red and falling, got directly below price. When that happens, it becomes support often because it's on its way to becoming blue and climbing. So this support sent price to resistance at the zone. That resistance sent us back to support at the BBC and blue and climbing. That's support times 2. So then we get a leg and a retracement and a leg that takes us to the target, through the target, and then you'll notice these two, this little double top from yesterday is exactly that high right there. See that? Okay. So then we get another retracement. Now, you don't always pull all the way back to the BBC. Sometimes a pullback to blue and climbing and the step line will be sufficient, as it was here, and that sent us all the way up here, where we did take out yesterday's high. Yesterday's high was 30.96. Today's high was 31.02. So 6 pennies. Now it only takes 2 pennies in silver to get your goal for the day. For instance, off the open last night, we opened at 30.48. And the low was 30.44. So that would be $200 per contract traded right there. Let's go back to the daily. Okay. Remember at the beginning of the broadcast, we talked about the fact that we had support times 2 right here, and then major support here at the 24% Feb retracement. I said by the end of the broadcast, we will probably see that price has traded through that support or backpedaled, and we'll have some wick. And we got some wick. So price right now is trapped between support here and resistance here at the BBC from the daily perspective. You can become a member today. No reason to delay. You can simply send an email to support@cfrn.net. In the subject line, put, "I want to become a member." In the body of the email, put your name and your phone number. We're not going to call you, but we are going to send you an email that explains everything it means to become a member or passport holder. And there'll be a link that you can click and make it official. Number 1, you're going to get 2 hours of live training every trading day. Now, it's an interactive environment. Real trades in real time and real markets, real money. While you trade along in your demo account until you qualify to go live, and you ask every question that pops into your head. The more questions you ask, the sooner you're going to learn the strategy. Okay? Along with 2 hours of live training every trading day, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators that you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published every evening. On Monday mornings, you'll get the weekly trading zones at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change. And you'll be able to attend the members-only workshop on Thursday night. You also get the golden key that opens all the private channels in Telegram, which means you'll have around-the-clock support. Everything a trader needs, all under one roof. One low price. Just send that email, support@cfrn.net. Just let us know you want to become a member, and we'll send you all the information you need. So with that, we'll wrap it up with our good word for the day. Friday, we started a topic, never stop learning. And that's what we've talked about for the last 2 days. Today, blind chance versus God's command, part 1. Psalm 139:14. I will praise you, for I am fearfully and wonderfully made. Could life as we know it, plant, animal, and human life, have spontaneously happened by chance? Could our amazing solar system be the result of an accident? The more advanced science becomes, the more evidence there is for a master designer. Researchers continue to uncover the divine order in each tiny human cell. American biochemist Bruce Alberts, former president of the National Academy of Sciences, writes this: "We have always underestimated cells. Undoubtedly, we still do. Cells are the basic unit of life. Indeed, the entire cell can be viewed as a factory that contains an elaborate network of interlocking assembly lines, each of which is composed of a set of different protein machines in defined positions." Now, the psalmist David wasn't a scientist, yet he recognized that each of us is a complex product of God's amazing hands. "For you formed my inward parts, you covered me in my mother's womb. My frame was not hidden from you, when I was made in secret and skillfully wrought in the lowest parts of the earth. How precious also are your thoughts to me. O God, how great is the sum of them. If I should count them, there would be more in number than the sand. When I awake, I am still with you." The average human heart beats 115,000 times a day. Our blood travels around 19,312 kilometers every day. To circumnavigate Australia by road is around 15,000 to 16,000 kilometers. Adults take an average of 18,000 to 30,000 breaths a day. And for the most part, all these functions take place without our awareness. Amazing. Today, stop and take a few minutes to acknowledge and thank your Creator for the amazing things He did with that first clump of dirt. And we'll finish this up tomorrow with part 2. That is our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.